Welcome back, everyone, to Vox Markets Live. My name is Paul Hill, and I'm delighted again to be able to speak to accomplished UK fund manager Gervais Williams of Premier Miton. So, big welcome, Gervais.
It's a real pleasure to be back, and actually such a good year so far. Everyone's making terrific returns, so that's a good start. So obviously, more interested in what's happening amongst the UK and small caps specifically.
Yeah, so just on that then, obviously we had a ton. Since we last spoke, we've had a ton of big macro news. I mean, I think we've had the Trump trade tariffs, ongoing wars in Ukraine, the Middle East, and a slew of corporate results in the UK of late. So putting all that together in the mix, what's your sort of outlook for equities, particularly in your sweet spot of small and mid caps for 2026?
Yeah, I mean, the sort of, the sort of standard sort of professor or sort of academic background is more uncertainty equals markets going down, except this year. I mean, we've had loads of uncertainty this year and the market's gone up. And I think that's really down to governments running much bigger budget deficits. Clearly, AI investments a big thing. So all of those things are good. But what we've seen and regarding the outlook is that actually the market's very narrow. I think most investors have an incredibly correlated weighting in many largest technology stocks in the US. I think the stock specific weightings are probably too high long term. I think the sector specific weightings are also far too high. And I think that come the next downturn, and we can't say whether that's 3 months or 3 years away, but when it does come, I think rather than previously when you can just turn on more financial stimulus at ease, I think this time with inflation, I think, the companies which are over indebted, those which are running cash flow negatives for too long, get wiped out. And companies with good and growing income don't just survive, but they thrive. As you know, when I spoke to you before, I've talked about the UK outperforming. What's thrilling about this year isn't so much the US has gone up and other markets have done well, but actually the UK is outperforming. I'm very, very pleased about that. But I think that's just the start. I think we're at the start of a 20-year trend. What hasn't happened yet is that second stage, which is small caps outperforming the mainstream UK stocks. They've been keeping up over the last few months, but they've not outperformed. But I think we've got the opportunity now for global growth to be more uncertain. Small companies can grow when the world's uncertain. They can acquire assets from the receiver and make disproportionate returns. Risk-reward ratio is exceptionally favorable for small caps, particularly UK small caps. I'm tremendously upbeat. I'm more bullish than I've been for 30 years.
Well, long may that continue, certainly in terms of UK outperformance. I did have a look at your portfolio, or the Premier Miton portfolio before we started. And you've got quite a high exposure to gold and commodities. Obviously, the precious metal has done rather well over the past year. Do you want to take us through the logic of having perhaps a slightly higher weighting in sort of gold, precious metals and commodities, just generally?
Yeah, I mean, the general pattern has been that most investors feel that, many of the best performing stocks are technology stocks. Some of them are service businesses, but, some of the kind of cookie cutter sort of expansion retailers, that kind of thing. And they've been just fine. But the nightmare really is that governments now are just spending fiat money at will. It will ultimately lead possibly to inflation. There will be periods of deflation as well. But most particularly, commodity prices are the only thing you can do to offset the risk of inflation. And so what we've seen isn't just, obviously a gold price going up, but many other commodity prices have been moving. And so as an investor, the great advantage of mining companies isn't so much that they can go up when the world's uncertain, but most particularly when they get lucky, they can get very lucky. And so if you were investing in a gold miner 2 or 3 years ago, you would have got it on a fairly low valuation. And many of the gold mining share prices have got up, gold price has gone up enormously. It's gone from 1,500 to 4,000, just touching 4,000 almost today. But most particularly, the gold mining companies, some of them have got 3, 5, 10 times, to be honest. And so as an investor, we need to actually keep an open mind and look at the full range of opportunities rather than just, the narrow range, which we've all got traditionally in mind.
Yeah. Well, let's talk through a couple of the gold miners you've got. One was Thor Explorations, which basically does gold mining in Nigeria. It's got a big open cast mine there. I think it wants to go underground, and it's also got an exploratory mine out in Senegal. But you've obviously done really well. What's sort of like? Obviously, how long are you going to continue to hold this one and run the winners, or is it something you'll sort of like have a look at another, in terms of taking some profits? What's your sort of position on it? Anyway, your latest.
Yeah, we haven't taken profits up to now. That's the main thing. Interestingly enough, this is a company we've had probably for 5 years. So the first 4 of those 5 years, the share price went nowhere. Even at the beginning of this year, would you believe it? It was standing on a 50% free cash, cash balance of its market cap, and it was on a free cash flow yield of almost 100%. Kind of completely mad, right? Needless to say, it's an awful way now. But coming back to it, yes, of course, there's risk to investing in Nigeria and Senegal and such like. But most particularly, even with the current forecast, and I think they'll have to go up because the gold price has gone up further. It's still on a P ratio of 3.2 times. They're looking to extend their current mine. It's got a shortest mine life, so I think we can look forward to that. I think they will. They've got 2 new mine projects which they could bring on stream. So absolutely, this is just starting again. Why would you sell it on a P3? No, we're not even thinking of selling it at the moment.
Yeah. How do you actually get money out of Nigeria? Because this was a problem for it was a different sector, but the PZ cousins about 18 months ago had a whole bunch of cash in the Naira and then it devalued. Admittedly, this sort of goes in I guess it's trading in Canadian dollars or US dollars. But how do you protect yourself against the currency?
That's always worth talking to companies about. A lot of central banks in African countries insist all the cash flow goes through them. And so if it does, of course, it goes into the central bank, and sometimes they say, terribly sorry, we haven't got the central bank, the hard currency to give you, we can give some Naira instead. But actually, in this case, clearly the company's generating cash and it's bringing in foreign exchange to Nigeria. Nigeria love, geese laying golden eggs, basically. So they want to encourage other mining companies to come in. The very last thing they're going to do is stop them getting hard currency at the moment.
Right, yeah, gotcha. Okay, good. Another one in that is KEFI Gold and Copper, North African gold miner, largely in Ethiopia. I've got some others exploratory plays in Saudi Arabia. Similar sort of thing. I think the share price has done very well for you.
Yeah, it's interesting, isn't it? Again, what's interesting about this one is Ethiopia. Obviously, you get a certain amount of country risk there, but actually, it's very difficult to raise capital to put into Ethiopia. But actually, many companies actually have capital trapped in Ethiopia; they can't get out. So that capital can be used to fund the new mining project in Ethiopia, because of a lot of that will be in local currency. A lot of the costs will be in local currency. So what they've done is really they put together a very large project. Actually, it's $340 million. Talu Kapi project in Ethiopia, which is going through FID and is now going to come on stream, and that will produce gold. And again, a bit like Nigeria, the Ethiopians love foreign currency. They love the idea of companies coming in and putting in new mines. They want more companies around the world to do the same. So I think that's going to be something which could be very substantial. As you say, the share price has already moved to some extent. It'll take 2 or 3 years to get the new production to mining, but most particularly alongside that, they've done an incredible job actually in Saudi. Many of the projects which they've been investigating, they put into a joint venture now. They've got copper as well as zinc and gold, of course. And so coming back to it, he's done an incredible job, to be honest. With very little, he's actually made some very, very major projects which could produce very substantial amounts of hard sort of physical commodities, which are awfully good when inflation may be a problem going forward.
Yeah, it's amazing, isn't it? Saudi Arabia, obviously, it's well known for its oil, but if it starts producing gold as well, wow, it'll be obviously do really well. Okay, good. If anybody
Saudi are trying to diversify. That importantly, they realise that they don't want to rely on just on oil. So you can understand that they've got a huge interest.
Yeah, and actually, just on the sort of top level with the gold price, obviously it's gone up like 50% this year to date, and I think it's doubled the performance over the last 3 years from the S&P 500. I think it's gone up 120% or so over sort of like 36 months. Is it getting expensive, or is it basically central bank buying and worries about inflation that are still going to drive it higher?
Yeah, there's no right price for gold. It's about behaviour specifically. And the behavior is that, some international countries are very reluctant to hold quite as many US bonds as they held previously. And so if you don't hold US bonds, you might have a few European bonds, you might have a few UK bonds, but basically what you hold. And so we're going to see lots of strategic reserves, not just in gold. I think gold will be part of them, but I think we'll still see strategic reserves in energy. China's building a very big strategic energy in crude oil at the moment, but also all sorts of other assets. I think copper's very interesting at the moment as well. So I think we've got a full range of different assets. US is very worried about security of supply, and so we've got lots of Department of Defense investments going into US miners as well. So really interesting time from that point of view.
Yeah, well, just on that one, let's just touch Guardian Metal Resources, which I think is the strategic sort of like metal reserves in the States. It's a big Nevada tungsten miner. How do you see this one? Because it seems to be Trump is loving this, sort of like getting away from the dependence of rare earths and metals from China.
Yeah, absolutely. What we've seen really is strategic metals, and we've seen particularly rare earths coming from mainly refined in China. They're not all mined in China, but mainly refined in China. So that led to a kind of a sudden realization that the US was very vulnerable to certain supplies, and one of the areas they are worried about is tungsten. And so this mine isn't into production at the moment. All that's happened is Guardian have got the rights to it. And then they're doing, exploration, and they're bringing it into production. And actually, alongside that, they've actually brought in another area, which is called Pilot North, which is also very, very, it used to be a mine, and so that can be brought in production a lot quicker. And then we got on top of that, they've got other nearby resources. But it's not just tungsten, although that's by far the most interesting feature. That's the Department of Defense investment, which has come in to accelerate the growth of that and bring it into production. But they've even got some copper as well in their hills as well. So coming back to it, I think again, it's taking something from an early stage into production, as we saw with KEFI. Then basically you've got the same kind of issue coming through here. And of course, as you say, the share price has gone up an awfully long way. We have taken some profits, to be fair, but I think it's a terrific company. We only came in earlier this year. Terrific, absolutely amazing.
Well, those first three charts is obviously your commodity and gold miner expert on that team is doing a fab job. So make sure he stays with you, I guess.
Well, that's me and Martin. We both okay. Yeah, so we don't have a special.
Okay. Yeah. Okay. Well done. We've got a question from Andy2205 asking about Beeks Financial, which I think came out with full year results today. These guys basically are an expert in all things high speed trading for Enable, the infrastructure, the software, the service. Absolutely. They put them into exchanges. Yeah. And I think some contracts recently with Johannesburg, NASDAQ, and more recently the Toronto Stock Exchange. So they're really sort of like doing pretty well. What's your sort of latest on this stock?
So we've retained this company. I mean, it's unusual because we don't tend to hold companies on higher valuations. It's not an expensive valuation. It's only about 13 times, but most particularly, it's not as cheap as it was. So most particularly, we're very excited by the range of incoming they've got at the moment. They talk about considerably increased level of new opportunities in the statement today, which is brilliant. I think they have, not just obviously many of the contracts you talked about, but they're doing deals with people like NASDAQ, which shows that the world's leading exchanges are coming their way. And so I think the opportunity for this to scale up very considerably from here is pretty damn exciting. And so that's the reason we're really backing the company.
Yeah, I mean, once you've got to those blue chip contracts with NASDAQ and the Toronto, then it makes it easier winning.
Yeah, I mean, coming back to the Johannesburg contract, which was an early one, they've upgraded 4 times since then because of the opportunity has continued to increase. Their functionality increases trade, and so they've had to upgrade by 4 times so far. Amazing. So it's not just getting there; the actual upgrades are pretty exciting too.
Yeah, and I think the opportunities actually, they're transitioning, aren't they, into a SaaS model. So most of their contracts now, rather than actually selling a server and selling the license up front, they're doing a revenue share on those exchanges. And on that basis, you've got this transition of turning from a lumpy type of business where you've got a lot of big contracts at the start. The revenues are shifted over multiple years, but it's going to be incrementally increasing revenues rather than having to worry about filling the bucket, every single year.
Well, that's absolutely right. And actually, when you move from one-off projects more to sort of revenue share, based projects, basically sometimes the profits and the growth of the business isn't that obvious at that stage, and so investors can sometimes misrealize and not quite appreciate quite how much up the upside is there.
Yeah, no, I totally get it. Okay, we got Colin. He's asking about Eleco, a build tech software business that actually went through its own SaaS transition about 3 years ago. It's gone through it now. I think its ARR is roughly about 80% of its total revenues. It does sort of building, project management software plus visualization, but increasingly now also asset management of property. What's your the latest on this one?
So I think it's an incredibly well-managed business, this. I love an outstanding management team. I think this is an outstanding management team. And how do you measure an outstanding management team? Not just in profit, although that's a good measure, but specifically customer service, staff motivation. I think on both those elements, I think Eleco scores very highly. You know, the visualization software is what they do. They're much in the building trade, you know, and they've extended to project management. They've got site control. They've made an acquisition this year, PMI. So it's got a lot of levers which are accelerating. I think it's becoming the dominant market position in this sector. And, you know, when you get into that position, incremental added orders just go straight to the bottom line. So I think you could see profits, which are already excellent, continuing to grow at a pretty rapid rate. So it is a software company. We don't have loads of them. But, you know, when they come from this kind of heritage and this kind of market cap, when it was quite small, of course, it's become larger now. You know, you can really make terrific returns. And Eleco has done extremely well over the years.
Yeah, and I think one of the things you mentioned, or you're quite keen on, is cash generation. And I know this one, I think that's a cash flow yield of probably sort of 5 to 10% actually. And you know, because it gets its licenses up front, doesn't it? As in, like, you know, for an annual agreement.
That's right. I mean, you know, and that's amazing for a company which is as reliable as this. You know, you do find mining companies have cash flow yields of 20, 30, 40% sometimes.
Yeah.
But they're not, you know, obviously commodity prices go up and down. This is just a year in, year out type of business. And so on those kind of cash generations, yes, boy, do we love them. Yes, absolutely.
Yeah. Good. Okay, brilliant. Well, we got Drew. He's asking about Concurrent Technologies. That is an expert in sort of like hardware, electronics hardware, plus firmware for largely actually the defense industry. Was a sleeping sort of small cap about 3 years ago, but obviously since the war in Ukraine, it's like all the defense stocks has done very well. How do you see this one going forward?
Yes, it's actually been a sleeping princess really for the last 20 or 30 years. Family-led management team, and that management team changed about 4 years ago. Actually, Miles Alcock got involved, and he has been, you know, even before the Ukrainian war, he started to transform the business. Subsequently, of course, it's been amazing. But coming back to it, I mean, there aren't that many defense stocks out there. There aren't many defense stocks with this kind of opportunity. You know, they have an incredible kind of industry position. Interestingly, not that close with the UK. They do supply the UK industry, but mainly the US. They've got a very strong market position there. The Philips acquisition 4 years ago or 3 years ago has been very important to them. But most particularly, they've widened the range of products that they're basically board on a computer, single computer on a board, very rugged type applications for defense, you know, just fit and forget type things. And when you get these, you don't just get these orders, you get obviously the follow-on orders as they break them and need to replace them and all that kind of thing. And then thereafter, of course, you know, when you want to upgrade perhaps your ship or your tank or your troop carrier or whatever, you take out the old boards and you put in some new ones. So with technology moving as fast as it is, AI coming through, of course, we're now seeing the opportunity for this company to sell not just more boards, but over a much wider range of customers at a time when they're investing very hard. You know, it's been a terrific return to date. It's standing on a relatively high valuation. Do we mind? Not a bit. No, normally we sell at high valuations, not in this case. You can't buy that many other defense companies, and the risk-reward ratio, in our view, is still incredibly positive in this company.
Yeah, the PE is about 30, which sort of implies they're going to beat expectations over the next 3 or 4 years.
But also, I mean, it's a scale. You know, we don't know how big the sale is going to be in 3 and 5 years' time, but they could be multiples of the current sale. Right? I'm not saying they will be. I don't know, right? But that's the nature of the opportunity.
Yeah, good. Okay, right. Let's stick in that same sector, sort of hardware, software, commerce. Go to Raspberry Pi. Sophie's asking about the business that I think did it IPO about 18 months ago, and it's been probably one of the few major successes. It's renowned, obviously, or known for its low-cost sort of like computer boards, and is now moving into low-cost chips, which go into all things industrial and stuff like that. How do you see this one going forward?
I think it's just, I mean, you know, but Eben, who runs it, the chief exec, I think is just I mean, I think he's done an incredible job. He didn't even want to. His purpose wasn't to set up a commercial business. His purpose was to get more people into coding, to go to university and stuff. And so that, as you say, the small board, use a lot in schools. They use it for coding, and then they can use the coding and the skills they achieve to go to university and learn more. So effectively, it's really boosted the amount of interest graduates in the sector. But most particularly, actually, the opportunities for the Raspberry Pi, the original Raspberry Pi, have widened and widened and widened, huge amounts of commercial opportunities, including a few defense opportunities as well. But most particularly, my view, and who's to say, nobody knows, so don't take this too seriously, but I think this will be one of our most important technology companies in the UK in 5 and 10 years' time. Will it be as large as ARM? Probably not. ARM's even bigger, dramatic, but it's got that kind of opportunity under the bonnet here. The range of customers, the solutions they come up with, their very specialist nature of the very easy to fit, because nearly everyone has a coding history in the past in the Raspberry Pi, so it's very easy to roll it out around the industry. I think investors are underestimating the scale of this business over the longer term.
Right. Well, what is actually then the USP? Obviously, I always thought it was sort of the low cost side. You've got NVIDIA at the top of the tree, which had its CUDA software. And then you've got basically people like ARM, as you say, have their own proprietary patents over their mobile sort of chips and stuff. What have these guys got similar IPR, which protects that low cost application area of their technology?
I think it's established. They have experience and know-how and all that kind of stuff. But specifically, what they're doing is, when you've got loads of companies make products which involve a computer board, and they usually get their own computer design and put their own software and all the rest of it. And what they're beginning to find, and they've had a recent customer where they used to design their own board, and they say, look, why are we designing our own board? It takes a long time. We have to maintain it. All the rest of it. Why don't we just use a Raspberry Pi board and we put our own software on the top? And so actually they're outsourcing board production now to people like Raspberry Pi. I think that's going to roll out around the world for small applications. You don't need 10,000 of these computers. You only need 100 or 500 or something, and so they can be used for that. And so they've got they've gradually had Raspberry Pi 4 and Raspberry Pi 5 and all the rest of it. So the sophistication is there. The range of applications is amazing. Even, as I say, on the defense side, they've got all sorts of defense applications as well, because you need smaller numbers of defense products. So actually, the risk-reward ratio, as I say, it's just an incredibly, I think the opportunity for this business surprise from here is very, very considerable. And so I'm just, as you can see, I'm incredibly upbeat. I'm tremendously thrilled they've come to market. Actually, I'm tremendously thrilled they've come to the UK market, because we just don't have enough of these kind of technology global leaders listed in London. Yeah,
no, I totally agree. I mean, I think I was just thinking their technology, you could see it applied, if it isn't already, is effectively in the field doing AI inference. So rather than actually doing the hard sort of like stuff that the NVIDIA chips, but if you want AI adoption in massive sort of like multiple locations around the world, you want them to be cheap, but also to be able to do the processing to the inference side, which you can do on a normal CPU rather than using a GPU. So I think you're right. Actually, I was just thinking about it. It could explode, couldn't it? The usage
I think it will. That's my view. Obviously, don't expect it to happen in the next 6 months, but that's the scale of the opportunity.
Yeah. Okay. Well, let's put a bow on this sort of hardware sort of chip area. Let's go to CML Microsystems, that basically are a specialist in low power specialist chips that go into communication devices, and that may be sort of satellites, it may be into digital radios, and into all kinds of different sort of communication technology. How do you see this one? Just inked a big deal, actually. I think it was a 12-year, $30 million sort of contract with an unnamed OEM. But anyway, what's your sort of thoughts on this one?
Yeah, it's interesting, isn't it? I mean, it's another sleeping beauty, to be honest, from our point of view. Clearly, it's very financially strong. It's got a very strong balance sheet. They just sold some land around the head office. So, the nice thing is, you're not going to be surprised the share price isn't going to halve or quarter or something, because it's run out of money. So that's important from my point of view. And they're going through this quite it's taken a while now, this kind of multi-year kind of reset in the business. They called it a multi-year transformational growth strategy, which is very exciting. And they now say they're actually in the growth phase. Perfect. And as you say, they've had a recent transaction. There'll be others. I think that a lot of people sort of use these kind of low power things. They kind of think it's only for small areas, but actually sometimes these areas can be very valuable. And so I think the opportunity for this to actually roll out its technology to a much wider range of customers with its new strategy, I think is going to be really very successful. And I think the share price will go up a number of times over the next few years. And that's the kind of thing we love, having things where the expectations are kind of very low to start with. And it doesn't take much to exceed low expectations. If you greatly exceed low expectations, of course, your share price can go completely ballistic.
Yeah, well, hopefully you're right there. Okay, good. Let's. We've got Vincent Genuine. He's basically asking about. I don't really own it. It's Gamma Communications. Do you own this? Or I think which went from.
We don't have it at the moment. No, I mean, to be honest, there's loads of small caps which are cheap, and Gamma is one of those. So we have looked at it. We do like it. But we've just got others which we just think the risk-reward ratio is even higher than that one, to be honest. Yeah. Okay. And then we've got Stefan. He's asking about Windar Photonics, which does sort of like specialist technology that helps improve the efficiency of wind farms by converting the wind energy into electricity. I guess has been hit a bit by the US and Trump not liking wind farms and turbines. But what do you see on this one? If you own it at all, I don't know. Yeah, we have owned it. We've taken profits for time being. To be honest, I think it's a lovely company in terms of it just puts a little eye on the top of the wind turbine, already in production in many cases, and it sort of detects where the wind is coming from. It can just change the yaw and things. You can get 2 or 3%, perhaps more energy out of these wind power turbines. So that's great. But most particularly, you can actually manage them so much better. So actually, it's not just about improving productivity, which it absolutely does. It's actually about collecting data and better managing the power and the purchase of power, the sale of power, and all that kind of thing. I think they're doing a terrific job. I think they are a world leader in this industry. I think they're not just being rolled out on the onshore in the US. I think across the rest of Europe. So I think there's plenty of opportunity. Share price come up a long way. It's not massively high, but it's come up a long way. And so we've taken profits and put capital into other things. But I do think it's a very strong technology stock.
Yeah. Well, it'll be interesting, actually, if we ever solve the way of actually storing electricity that we had this weekend with Storm Amy. And apparently we've got 75% of the UK's electricity came from wind over the weekend. And we had negative wholesale prices because we couldn't store it, unfortunately. But if we'll ever be able to have sufficient battery farms or some sort of other way of storing energy, then this thing will absolutely explode, I would have thought, because it becomes then free energy.
Absolutely. And the good news is that actually the battery technology is moving at great pace. And that the cost of these batteries is coming down enormously. And in the same way as we've seen with solar panels, where, you can buy, them to a penny, not quite, but you know what I mean.
Yeah.
Right. We're going to get to the same position in batteries. And when we've got batteries, you can actually obviously, harvest energy during the daylight and continue to supply it overnight. So if, you can use your solar panels, you can have twice as many solar panels working.
Yeah.
Yeah. So I think that's going to be, I was just talking to a company called Atome, Atome, this morning about that actually. And, they were talking about how much the advancement's been in that area. That's involved in fertilizer.
Okay.
In South America. But the point is, we've got just such a considerable range of companies listed in the UK. It's not just about picking one or two winners. You've got the opportunity to pick a range of winners across a range of different industries. And so if you make an assumption about the future, which turns out to be wrong, the nightmare about protectionism, nationalism, you can be wrong about the future. But having a broad sector representation is particularly exciting, and having companies which can grow when the world's not growing, small caps, are both exciting. I think the UK will become the leading market for small caps globally. I'm upbeat, but I think it's going to be a much wider opportunity than just the UK small cap sector.
Good. Okay. Well, let's talk about one company that has actually bucked the trend over the past 2 or 3 years. Go to Intercede, which is basically a software company that does sort of proprietary identification for really some massive blue chips out in the States. The things like the US Department of Defense and other federal businesses out there, and large corporates like Boeing, I think. So, how do you see this one? Its shares have done very well actually over the past 2 or 3 years.
Quite well. It's sort of flattened off a bit recently. The key issue is digital identities. in that, it's all very well having cybersecurity and all the rest of it to stop people getting in, but if you've got the wrong person through the door, obviously, then it makes no difference. So this is becoming a much more critical issue for many, not just government agencies. Of course, they're horribly interested in checking who you are, but actually even quite sensitive businesses in sensitive sectors such as Boeing, in defense, anything in defense, of course. So you're seeing, what's amazing. Here's a British company, with leading market position in the US again. What a wonderful thing. Okay, its profits are growing, but they're not growing as fast as some other companies. But in terms of market position, I think it's just a wonderful business. The kind of thing I kind of hate really is that you got companies like this, and you come in next morning, and then they've had a takeover at 60% premium. I don't want that to happen. We've got so many companies like Intercede, which I just think just leave them alone, and they'll go up 60% quite happily if you give them 2 or 3 years, and then all the rest afterwards. So it's an absolute, it's a very high quality company. We're very impressed by the market position, and it's done perfectly well up to now. Not so much this year; it's flattened out for a bit this year.
Yeah. Well, yeah. I mean, I think you're absolutely spot on, because over the weekend I was watching the new Sora 2 video application from OpenAI. And it is just phenomenal. And what the cyber criminals can do with that in terms of impersonating people and syncing in the person's exact voice with their exact identity into exact background is frightening in terms of how protecting against it.
That's right. No, exactly. So this issue is just way up the agenda compared even with a year ago. You're absolutely spot on.
Yeah. Okay, good. We got Javan Turner. He's asking about, I don't know whether you own it, Churchill China, which is basically the ceramics business.
Yeah, we have been involved in the past. Have probably been out of it about 10 years now. Don't get me wrong. I think manufacturing is going to become more important again. It's a manufacturer in Stoke, of course. There aren't many of them left. It has a very strong market position in terms of supplying the catering industries. Specifically, its plates aren't too heavy, and more important than that, they are very chip resistant. You don't really want to be, putting them through a process and finding they keep getting chipped. So all of that's brilliant. But they have seen sort of intermittent sales peaks and troughs. So they think they struggle a bit on that. They distributed other people's products, which hasn't made some money, but it's not the main thing. But most particularly, it's core business, and I think, again, manufacturing locally is going to become more important. And I think Churchill China will have a recovery prospect. We're not involved at the moment, but I think the foundations are there for recovery.
Okay, good. We've got Tim. He's asking about small cap oil services company Plexus that does this patented POS grip device that helps oil and gas companies plug a sort of abandoned oil fields to stop methane coming out. I think they did a fundraise not long ago to do more of a rental model. How do you see this one?
I think the technology is outstanding. I think the company's been, it's been affected really by oil price going down and less investments and all that kind of thing. But most particularly, it's got, extraordinarily major opportunities to increase its rental fleet. So they raised capital that we supported that, basically to actually manufacture more of these wellhead equipment. So they've got 4 which they're manufacturing at the moment. They've got 4 more they're going to manufacture for 4 they're going to sell, and 4 they're going to manufacture for their own plant hire. But most particularly, that will take them up to 16. And the cash paybacks on these are so quick, right? It's ridiculous, right? So here we've got a company which is only 12 million market cap. I think sometimes people just look at the share price, they think, oh well, perhaps, but sometimes these market caps are so tiny versus the scale of the opportunity, which is so big, that's when you do get the opportunity not just to make 50% or 100%, you can make a multiple on your share price. I think Plexus has exactly that kind of opportunity, not over 12 months, but over a sort of longer time period. And so again, technology company in the UK, world leader in its industry, sensational.
Yeah. Just in terms of that technology, I mean, I did actually ask a expert in the industry, a geophysicist. He used to work for Shell, and he works now for another sort of like oil field company in the UK. And I asked him about abandonment, and he said the way the regulations work, you have grades 1, 2, and 3, and the grades 1 is you plug it with concrete. Grade 2, you plug it with concrete, and grade 3, you put another lot of concrete on it. And he said about Plexus, which I could be wrong, I don't know, was that it was a lovely solution for things like carbon capture where the regulations are so much tighter. But if you wanted a cheap and cheerful product that just met the regulations and didn't go over and above them with methane, then that's where, Plexus may not be, adopted everywhere, particularly if you have a lower oil price. I don't know what your thoughts on that, whether that's true or not.
I hadn't heard that, but what I do say is, I mean, when you look at the customers of Plexus and the range of demand from their customers, and these are global oil companies, I don't think they're just using abandonment. I think they're using other, repairs and such like as well. So I think they've got a wider range of uses, and specifically looking at the demand from their customers, which is very, very high, which they can't meet. Then I take great comfort in that, really, and that's really why we're so upbeat about the company.
Okay, good. Okay, we've got George Roach in the same sector asking about Savanna Energy. Do you own that? It's basically, I think it's is it a North Sea oil and gas producer? Or...
No, actually, it's operating in Nigeria. Actually, in this case,
okay,
it fell out with it had some assets in Nigeria as well, and other places which it's fallen out with. It was building them, and then there was a nationalization of their assets. They've got a court case at arbitration to get that back. But most particularly, it's got a very substantial cash flow. So they've been negotiating for many years to try and bring in some other assets. So the share price was suspended for a long period, which not great really. But coming back to it, actually, the underlying assets themselves are generating very substantial cash flow, and we are looking forward to. Actually, they're just about to announce figures that they're still negotiating figures at the moment with their auditors. It takes some time. Unfortunately, it's taken more than 6 months in this case. But most particularly, it's the cash flow which we're excited by. And again, operating in Nigeria, yes, it's a risky country, but they've got a lot of their revenues which are actually backed by the World Bank. So even if Nigeria weren't to pay, then theoretically the credit risk is not there. So again, coming back to it, there have been other companies which have been operating in Nigeria which have been even more successful, actually. We are tremendously upbeat about the cash flow, which is the key on this one.
Good. Okay, brilliant. Okay, we've got, let's move sectors to more the consumer services. We've got Jill, she's asking about Paypoint, that basically does sort of the ATMs in convenience stores, has also got a sort of like a courier pickup parcel delivery called Connect Plus, and I think it also owns a couple of websites that do personal sort of like products and stuff like that. Inked a big deal actually with the Royal Mail last week about selling half of its joint venture in Connect Plus. How do you see this one? I mean, it seems to have value in areas that nobody appreciates until it's sort of like out in the open.
Well, exactly. I mean, I think actually, this is really about people visiting corner shops. So they're the software system. You often go in there. You can just use the software system for an increasing range of things. They can use it for paying all sorts of benefits, for example, getting cash out, of course. But most particularly, they've increased the range of those services dramatically over the last 5 years. Share price, bizarrely, had it was very high. It was led as a sort of technology winner back in the sort of 2015 to 2019 period. The share price came down in 2020. It's generated plenty of cash. It's generating good yield. It pays a very attractive over 5% yield. And it has all these new areas coming through. So some of it's technology. It's sold to a New Zealand banking group, for example. As you say, just in the last week, they've sold 49% of their Collect Plus, which is those boxes you go and, if you're not going to be in, you can go and put your kind of thing to be picked up from the Royal Mail in one of these Collect Pluses, or if you've got a delivery from Royal Mail, they can put it in this thing and you can pick it up from a local shop on the way home. Again, we think again it's just kind of ridiculous. Here's a company which is actually generating good and growing cash flow, good and growing dividends on a PE of only 9.8 times. It's kind of ridiculous. Okay, that's through to March next year, but boss. Line is, it's kind of these kinds of companies should be standing on much higher valuations, and there's moving now, but it's gone nowhere for the last 5 years. Amazing.
Yeah, you could see private equity putting a number on these, unfortunately.
Well, I don't want to see private equity. Thank you very much. They're doing it because they can make 5 times their money. We're going to make let's make our 5 times our money. Thank you very much without them.
Yeah, they'll break and build that, won't they? They'll take it all off and then they'll sell each individual part to a trade buyer at a big price. Okay, let's stick on that sector where you've got licensing of technology out. Let's go to CMC Markets, which is one of the sort of the big sort of like traders stroke dealers for spread betting companies, but is licensing out its technology to a number of different companies. And I think last week inked a deal with Westpac out in Australia. How do you see this one? It's still very cheap again.
Yeah, I mean, again, cash on the balance sheet, generating cash. Okay, it had a particularly good year, 2020, 2021, when a lot of people were sitting at home in front of trading terminals. But most particularly, I think people underestimate the quality of its software foundations. I think it has a much stronger foundation in software than most of the competitors. And that's why, yes, of course, it's done the deal with Westpac recently, which is brilliant. But actually, it also did a deal about a year ago with Revolut. Now, Revolut, of course, is valued, I don't know what, some billions, I don't know how many billions it's capitalized, but they also want to offer the same kind of services to their customers. They approached, the vast majority of the competitors in this industry. And the one which absolutely could hit it in technology terms was CMC Markets. So, I think there's the Revolut, they've got the Westpac. If you think of the next 5 and 10 years, there'll be loads more of these kind of companies coming in. So it's not just the foundation in terms of the trading, which I think actually is pretty profitable, generates lots of cash. Sometimes it has a knockout year, but most particularly the ability to actually widen the range of services to a large number of companies such as Westpac and Revolut. I think that's the feature which gets me most excited about this company.
Yeah. Could these guys do like a Pinewood Technologies, eventually sort of separate that sort of like, software, as in like they're effectively, they would license it from another company that they could spin out and then have a standalone company that doesn't compete with their customers, because it'd be a really interesting opportunity to release hidden value, as happened at Pendragon when they did the spin out of Pinewood.
Yeah. The answer is yes. But actually, let's let them get a lot more contracts first, right? So they got ANZ and others. They've got a much stronger position than most people think in terms of engaging with customers, direct engagement with customers, let alone bringing partners. So let's just let them scale up, and then we can think about whether they want to spin out the software. But I think that it is the software stack, which I think is the key valuation, which should be driving the share price rather than anything else.
Yeah, no, I agree totally. Okay, let's go back to the consumers. We've got AO World, which is all things sort of like online delivery of white goods and electronics to people's homes. Went through a boom time during the lockdown originally, then struggled a bit. I think it went over to Germany, I can't remember, and then may have sort of closed. Yeah, then has sort of come back. And I think these guys and the other one, I can't remember, the other big leader, Currys, is doing really well. Yeah. What's sort of driving the growth at the moment? Because it's sort of double-digit top line like-for-like growth.
Yeah, I think the key issue about this is that there's quite a lot of losers in the sector as well. I think John Lewis is a big loser in terms of delivering home electronics. And actually, you probably noticed recently there was also a warning from what's the other one called? The tiny
Marks
one.
Electrical.
Marks Electric. Yeah, that also had a warning recently. So I think it's winners win, and I think losers lose. Unfortunately, the key, which I love about AO, isn't just the quality of their foundation, the investment, all that kind of stuff, the range of product they have, but most particularly their focus on customer service. They've got 4.9 on the kind of this Trustpilot score and all the rest of it. So that's crazy. 4.9, it's kind of amazing. Yeah. They've also offered this 5-star service thing where you don't just get extra discounts by paying 40 quid a year, but most particularly, the wider range of products. They send you updates and special offers on Black Friday and all the rest of it. So I think the ability of them to widen the range of different products they offer to you, they do offer a certain amount. They bought a Moose Magpie, remember, which was secondhand phones, and I think they're going to expand in that area as well. So I think it's not just where it is now, cash generative, profitable, buying back shares and all that kind of stuff. But I think it could really surprise over the next few years in terms of not just taking market share, which I think they will do so, extending the range of services, yes. And ultimately, actually generating so much cash that you don't just get, some buybacks, you get lots of dividends and dividend growth. It's very amazing. The chief exec, who was the original founder, came back. He's done an incredible job, really, of giving a large, I think, possibly all. He was quoted by the BBC as the last 7 years, he's given 100% of his bonuses and things to charity. Incredible.
Yeah. No, absolutely. Yeah. No, I mean, he's to have somebody of that quality back leading the company, who was a huge success in driving it from zero to where it came to on listing. To have that back at steering the ship is great for shareholders, I think, because he's obviously demonstrated he knows what he's doing.
Absolutely. And more importantly, I mean, he did close Germany, which was not an easy decision. But the point is now, once you get to the profitable core business, and there are unfortunately some walking wounded, you can expand quite rapidly, even if the market doesn't expand that much.
Yeah. Okay, good. Let's just stay in the consumer sectors. We've got another very entrepreneurial company, sort of like founder-led owner, is Supreme, that does sort of like, I think about 50% of the business is still in the traditional sort of vaping. It's got its own brands it distributes, but it's now been expanding into drinks and is obviously in lighting and batteries. And it bought Thai Food Tea recently, along with Clearly Drinks last year. And how do you see this one? It's trading at a very, very attractive valuation again.
Yeah, I think people worry about vapes and the regulation of vapes, and they do manufacture. I mean, it's not just they supply vapes; they manufacture a large part of what they supply as well. It originally started particularly supplying corner shops, so that's their core. They do quite a lot of sort of different range of products, lighting and other things in there. But most particularly, coming back to what you're saying, they've got the foundations to scale up now. So it's got this cash flow and stuff. So coming back to it, yes, Thai Food, I think, was an amazing acquisition from
yes.
Again, what a brand, what an opportunity there.
I agree.
But actually, even on the drink side, you could easily underestimate the scale of that. They've got their own supply of spring water, right? How much does that cost to kind of get up and running and get into production going forward? So again, we think we could do very, very considerable things with that. Just in the last few months, they've just picked up 1001 Carpet Care as well. Yeah. Again, they're pretty excited. So the key issue is they're buying assets from distressed sellers at what they consider to be entirely the wrong price, and then can generate what we consider to be an abnormally large amount of surplus cash thereafter, right? Yeah. It don't need to be that sophisticated to see what will happen once that comes through.
Yeah, no, they're very clever actually, because they're buying, as I say, not only good assets at low prices, but I think they're putting it in. They're buying them as they're non-perishable, long life type products that can go through their own distribution centre, which they built in Trafford Park in Manchester, which has got more capacity. So it's sort of like a easy just bolt on, and you take away a whole bunch of costs that the other company before it became part. You just lose those costs.
Absolutely. And, I think there are going to be more insolvent companies. I think the opportunity for quoted companies, not just to acquire these assets, but, sometimes there'll be bigger assets, that they'll acquire the business for £1, albeit it needs 30 million of working capital day two. And at that stage, they can raise 30 million and to generate a transformational return, very, very, those kind of opportunities are going to be wonderful, especially if other companies aren't generating much cash at the same time.
Yeah. Okay. Good. Let's move to Zotefoams, that does these specialist foams that go into, some of it goes into the insoles of sort of trainers, and I think one of their biggest customers is Nike, which owns about sort of 45%. Not owns it. It has about 45% of its sales, and then the other specialist foams go into sort of industrial applications. How do you see this one? It's I think is it building a factory for in Vietnam, I think, as with the party.
Yeah, it's originally. I mean, it originally started off in its first factory was actually in Croydon Airfield originally. Croydon is no longer
okay.
So they still have their original factory sort of somewhere close to the Croydon shopping centre, bizarrely, but they haven't made it. I mean, again, coming back to it, it's technology led. And don't underestimate the quality of this technology. PVC foaming, for example, is extremely difficult. They've got a huge range of different foams. Yes. They used as well in springing us for the Nike sort of top of the range trainers as well. But coming back to it, here's an opportunity for the company to actually scale up its technology base. Yes, it has a US manufacturing plant as well as a UK manufacturing plant. Yes, quite a lot of its foams are used in insoles and such like in trainers. And yes, they've just done a deal actually with Sehung as a joint venture in Vietnam, where they're building a factory out there, and that will obviously be improve efficiency and with all the tariffs going around, it allows them to continue to be very competitive, which is very important. But ultimately, again, this is the kind of company where I'd be absolutely gutted if I came in and someone had taken it over for twice the current share price. I don't want someone to make 5 times their money somewhere, by buying it. I want to make 5 times money for my clients. So I think these are the kinds of companies. The share price hasn't moved that much, and we've got to be very careful about leaving these companies too low priced for people to take over. Really.
No, you're right. I mean, I think one of their competitors now is Coates, because they bought a trainer stroke, sports shoe insole manufacturer, and I think last year for about 12, 13 times EBITDA. And so given about half of these revenues of Zotefoams is in exactly that area, they trade at 7 times EBITDA. And as I say, Coates have just bought a very similar part of that business on almost a multiple of double that. You're right. It's you could say it's vulnerable for somebody who wants to get into that market.
No, exactly.
Yeah.
I mean, and we have just got these kind of companies, and because their share price hasn't moved a lot over the last 12 or 24 months, people think they're kind of dull companies. No, the market is very, very concentrated in these mega caps, and these companies, whilst that's been happening, people are taking capital out of all the other parts of the market. Even US small companies have underperformed, right? It's not a UK thing. It's this kind of sucking motion into these mega caps has led to these opportunities, which is why I'm so upbeat about the risk reward opportunity from here.
Good. We've got Ben Sharman. He's asking about, I don't know if you own it, Geiger Counter. Is it basically uranium type of? Anyway, the shares have done really well. What's your latest on this one?
So actually, we do have a holding. We've only bought it in the last 3 months, I would say. I mean, most particularly, this is a investment in uranium mining companies. There aren't many uranium mining companies in the UK, of course, but this company invests. It's a bit like a fund. It stands at a discount. So it's the largest holding is in a company called NextGen, which is it's got about 16% of that, which is a uranium company, which is very exciting. Actually, I think could be pretty exciting. But there's plenty of others in there as well. Many are quoted. We think uranium is going to be in huge demand. Not just because of the SMR, this small modular reactor rolled out, but actually, of course, the whole demand really for sustained power for data centers. And so we think there's going to be a rollout of SMRs. We think there's going to be people like Microsoft and others moving into nuclear-powered power stations or keeping nuclear power stations going longer. And I think there'll be a bigger part of the mix actually in the US going forward too. So coming back to it, yes, I mean we've seen what's happened to the price of gold. Is that going to happen to uranium? I don't know, but it could do. And so having Geiger Counter, which is standing at a discount to its assembled parts, kind of madness, is very exciting.
Yeah, no, I would agree. Okay, good. We got one final question from Mike. I don't know whether you still own it. It's Cyanconnode, which I think it does sort of like, is it technology devices that go out in India on Internet of Things?
Right.
Sort of stuff?
Yeah, it's very much in helping people with, rolling out, smart metering, basically. And the Indians have a big program to do so. They've got vast numbers of contracts, which is lovely. Which is very exciting, but actually very few of them have actually booked and taken the smart meters from them. So that's been something which has been kind of hanging on really for the last 2 or 3 years. The company has raised capital. They've sold a part of their core business, but most particularly, they still have those contracts, and those contracts are going to come through. And I'm quite sure the Indians aren't going to do so. It's a bit frustrating. It's taken 2 or 3 years longer than we would have expected. But the market cap is, at that extraordinarily low level. So when they do come through, is it 3 weeks or 3 months? We'll find out. But yes, no, we've retained our holding. Coming back to it specifically from the question you raised.
Yeah, and how does the share? If it does go, everything goes well according to plan. How do the shareholders get money out of India? Is these the capital controls, or is it basically, the company might sell itself to a local Indian technology company?
Yeah, I mean, you can transfer money in and out of India, so it is capital controls. You're absolutely right, but when you put the investment in, you can get the investment out because they want further investment going forward. They've obviously put a certain amount of loans in to their subsidiary in the US, into India. So that's and it's not just India actually. They've got some very important South African contracts. They've got some Arabic contracts as well in some of the Arab countries. So it's not just that actually. They've got plenty of other times, but most particularly the scale of the cash flow when these orders are delivered is very exciting. They've still got quite a lot of RFPs out actually, which could confirm as further orders as well. They're the market leader at the moment in India, which is just amazing. So they remain market leader, and if we do get those smart meters installed, then they will surprise in terms of how much cash they generate.
Good, fantastic. Okay, brilliant. Well, I ask at the end of the conversation, I ask all my sort of experts what their sort of like number one sort of favorite stock idea is for the next sort of like 12 months. I was just wondering whether you have any sort of one or two.
Well, I was thinking about that. I mean, I meet so many companies. I mean, I've been able to talk so many. And so actually, I was just thinking, well, I just take the company I met this morning, Atome, right? So it's only 30 million market cap. it's got this extraordinary supply contract from the hydro in South America, which is due to come on stream. They've just announced extraordinarily large companies are signing up. They're going to be making fertilizer with the hydrogen from the from this power station. But you know, and that's going to go across the line into basically sanctioning the investment of this very shortly. I don't know whether it's the end of this year or next year, whatever. But that company, as that goes through, has an extraordinary potential. I think they've, quite quietly, they've been building this potential over recent years. Now we're quite close to the finishing post, and they get recognition.
Where do they actually manufacture the fertilizer? Because obviously Trump has sort of nailed quite a few South African countries with very heavy tariffs, like Brazil's 50%, but others have.
Yeah, it's Bolivia. This is Bolivia. But coming back to it, I mean, would you believe just recently, the Ukrainians sent a lot of missiles and did a lot of damage to the ammonia nitrate plant in Russia, right? So don't be too careful. These are things which are kind of commodities, but commodity prices can be low, but they can be very, very high suddenly as well.
Yes.
So it's
fabulous. Okay, well, I'll have a good look. I've never even looked at Atome ever before, so I'll definitely run the rule over that. So big thank you again, Gervais, for your time. Excellent insights. Thanks everyone for your questions, and I really hope you're right in terms of small caps coming back. They've obviously outperformed the UK. Well, UK's outperformed of late, so with little luck, long may it last.
There's plenty. I mean, if I'm right about the future, we're starting a 10 or 20 year cycle. As you know, I'm very upbeat.
Fantastic. Thanks again.
Thanks very much, Paul. Thanks for the questions.